So if one were to look at, you as an investor were to look at a particular company, say a Zomato or a PB Fintech, say in 2008, when you did invest in some of these companies, what was the thought process? What were you thinking about? How were you looking at the opportunity at that point?
So we typically don't do, total addressable market. We don't do TAM analysis. What is total addressable market? Because we believe TAM will work its way. India is growing, the internet is growing. If the founders are bright and committed, they will figure out the TAM. Okay? What we look at is what they're trying to do useful, and two, are the people good and committed, and will they stay for the long haul? If both these questions are answered, and as yes, then we know that this company is in with a shot. Then we go further. And then in India, you have to be patient because, from inception to IPO, typically a company takes 10 to 15 years. The real value is created after the IPO. It's a good company. So I would say that be patient. Founders are good. It'll work itself out.
Okay, so you've covered a couple of points here, and I'll try to break it up. I'll first talk about founders, because patience is more driven from an investor standpoint, which is from your standpoint. But just talk to us about the founder factor, as well as maybe another one or two factors that you look at outside of the founder that attract you to a particular company if you were to invest in.
इंडिया में कंपनी बनाने के लिए कम से कम 10 साल लगते हैं, ठीक है, और अंतर्मन का तेल निकल जाता है. So you got to have founders who are committed, who are courageous, who will go the distance, who are not interested in flipping in 3 years' time, who want to build large companies. That's when you can be patient. If the founder is not patient, how can the investor be patient? So both founder and investor have to be willing to be there for the long haul. Right now, apart from founder and idea, of course, you look at network effect, you look at IP being built, you look at competition, you look at a whole bunch of other things, right? But those are all things you look at after we are comfortable with the founder and the idea.
Right, so one of the unique things about what you've done is, one, you have a niche for catching good companies, but you have also got a very, very high hit rate for that. Just talk to us about how do you judge what really stands out when you pick your companies?
I think it's people and idea. You see, what we believe is that most successful businesses are built on deep customer insights about some unsolved problem. So you got to see what is the customer insight, what is the unsolved problem they're solving, and you got to look at quality of people, how committed they are, how capable they are, their integrity. And very often you're making judgment calls on a young person's capabilities 10 years out, 5 years out, 7 years out. And you sometimes get those wrong. We've been fortunate. We've got it right many times on people. We've done about 100 startups. We've been wrong on people maybe 2-3 times. But by and large, we've been right about people. And once you get beyond people and customer insight and unsolved problem, you get to areas like competition, network effect, IP, cost structures, unit economics, all those things.
But sir, to you, those things are more secondary. Is that how you look at it?
Well, let me put it this way. There's in calculus and maths, in differential calculus, there's a necessary condition and a sufficient condition. So necessary condition is, customer insight, unsolved problem, and quality of people. Sufficient conditions are the remaining stuff. You need both.